Well, Coforge is the stock of the morning by far, right? I mean, it's reacting to very strong third quarter numbers. And remember, this is a beat on what were already stronger expectations. If you sort of compared expectations going into the earnings season, Coforge and Persistent were right on top in terms of the growth expectations. So and of course, Coforge more so has beaten that. Let's talk to Sudhir Singh, CEO and Executive Director at Coforge, who's with us now to tell us what next. Sudhir, good morning. Great to have you with us here post every quarter as always. And you kind of told us after second quarter what next. You said you called it as a very strong FY25. You said Q2 was an aberration. Q3 is going to be extremely strong. It's all panning out exactly like that. 9-month revenue growth is 27.1% dollar revenue growth. Just tell us a little bit what went into the mix. Just the most important two or three things. What went into the results and what should we expect now for 27? For FY25, beg your pardon. Go on.
I think the not just the quarter to come, but even the next year promises to be extremely solid because of a few things that have already been locked in through the year. You noted the YTD growth at 27+%. More importantly, from our vantage, in this quarter, which is a seasonally short quarter, we've already signed 4 large deals. Importantly, the signed order book over the next 12 months is already $1.37 billion. And that's more than 40% higher than where that metric was a year back. So going forward, given the pipeline that we have, given the large deals that we recently signed, given the signed order book, and given how the margins have been trending extremely positively and aggressively upwards, even sequentially, we continue to feel exactly in line with what I told you at the end of the second quarter. The year to come appears to be a year that will have sustained, robust, and very solid growth.
So they're so better than 25, just in terms of growth rates?
We don't give a guidance, unfortunately, so I can't share that number with you. But for now, I just qualify that as very robust growth, profitable growth. And for a firm that's now been growing for 8 years on a very sustained basis, sustained growth into the 9th year as well.
Sudhir, hi, morning. Can you just break up the trajectory in terms of how strong the organic growth is and how well the recent acquisitions are sort of playing along? Cignity, for instance, I know the margins have come in, I think, above 17% now. So what is the breakup? And going forward, while you're saying the next year is going to be bigger, I mean, just walk us through whether it will mean more in terms of margin expansion or whether it will be just sustained top line action. I think you're at 25% dollar revenue growth so far, 9 months in the current fiscal year. So just give us the breakup, organic, inorganic, and what to expect going forward.
Sure. Let me break the numbers down for you. The non-Cignity business sequentially in the quarter has grown 9.4%, and Cignity has grown 3.5%. They also had that business had a solid quarter. The non-Cignity business, which is the organic business that you're talking about, has grown 9.4%. So it's had an absolutely exceptional growth quarter from our vantage. Though that's the breakup of the numbers. And as I said, we would expect growth to be robust across the firm and across both the Cignity and the non-Cignity portfolios on a go-forward basis.
Hi, Sudhir. Congratulations. Solid set of numbers, and your commentary as well is pretty good. Give us an updated timeline then. I recall you telling us that you'll be going to $2 billion of revenues and margin expansion of 150 to around 200 basis points. By when?
We've never really put a hard quarter timeline to it, but the key metric that I would like to point out is that in 7 quarters, the revenue run rate of the firm has gone from 1 billion to 1.6 billion.
Right.
It's taken us just 7 quarters to grow 60%. I suspect 2 billion is not too far off, reflecting back on the trajectory that we've already plotted out, the pipeline that I referred to, the signed order book that we have. Can't put a quarter number to it, unfortunately, publicly at this point in time, but we have very clear plans. We have very aggressive plans, and our confidence, as I suspect you've seen from my tone, is sky high.
So, Sudhir, that run rate, could you hit it towards the end of FY26? Some were expecting it by FY27, But towards the end of FY26, you don't rule it out that you could get to the $2 billion run rate?
Our attempt will be to hit it at the earliest possible. Our track record, which I've talked about, 60% growth in 7 quarters would attest to the fact that we are hungry, we are capable, and we are just about as committed as any team can be. So the intent is to get to it at the fastest possible clip here on.
Oh, absolutely. Well, the market is definitely noting your tone, Sudhir. The stock's flying almost 10% higher, and it's not just the tone, it's the numbers that are absolutely matching up. So we've discussed a lot of the numbers. I just want to understand slightly qualitatively, maybe in 40 seconds, what are these new clients telling you? The sign-ons have been very, very strong as well in the past quarter. Which are the segments that are firing? Which are the geographies that are firing? Because you're definitely doing something very different in an environment where a lot of the bigger players are struggling with, anemic single-digit growth, of course, on a very large base. But just trying to understand, what is the niche that you will go after in the next couple of quarters to sustain the 60% sort of growth rate?
The 40-second clip would be as follows. Travel revenue passenger kilometers for airlines is expected to grow 7%, which is a huge demand outlook for the airline sector, given the nature of that sector. We therefore expect to ride the personalization wave. We expect to ride the digital mall creation out of airports wave. We expect to ride the AI-based customization wave. That's travel. Insurance SMB space, the need for legacy modernization driven off platforms like a Duck Creek, Guidewire, Majesco is extremely strong. And the emerging trend is to ally that with no-code, low-code platforms. That's a sweet spot for us. We intend to ride that. Banking, operational resiliency, regulatory compliance are areas where spends continue to be strong. That's an area that we've always been very good at. And that's a third wave that we expect to rise. That would be the 40-second clip for you.
Okay. Helps. Thank you.
It's like an arrow locked into the target. But jokes aside, I mean, it's executed extremely well. And of course, it's for everyone to see. This entire AI infrastructure boom that we're seeing in the US, I mean, do you kind of sort of play in some way into all of that? Or you don't need to. You're doing well without. But just asking you that.
No, we very much play into it, and that's one of the contributors to the kind of growth rates that you commented on right now. We are increasingly seeing that the conversations around AI are pivoting more towards data-first conversations. So the conversations are increasingly around scalable data pipeline creation, which is where we are helping our clients. They're increasingly around vectorization or infrastructure build for AI model training and deployment, which is again an area that we play in. And obviously, since AI operates as a diagonal and not a horizontal for us, it is straddling all the HPUs and every horizontal offering that we have. So AI clearly is a space that's of vital importance to us. We've been locked in it like an arrow, to use your words. And that's an area which we expect to infuse just about every solution that we construct for our clients on a go-forward basis.
Okay. I mean, you send the stock up 10%, Sudhir. So, I mean, not you, but the results. And of course, we had the results, you and your team. So it is locked. The 9,050 on Coforge. We have more questions, but no time. Thank you very much for joining us this morning. Appreciate it on CNBC-TV18 as always, and look forward to our next chat.